Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, February 6th, 5:02 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see over here on the trend gauge, market leaders acting just fine, showing bullish there, and then all five of the major indexes above their short-term 21-day exponential moving average, above their medium-term 50-day moving average, and above their long-term 200-day moving average. We're looking for the slopes of the lines on all of the indexes, 200-day moving average, to flatten out and then turn up. The laggard is the NASDAQ 100, as while it's leading this year, lagged for most of 2022. And in the S&P 500, only 1 to 2 points lower each day now. So looking for that to flatten and then turn higher, provided price stays up. Of course, you need price above it to sort of pull the slope of that line higher. So what happened today? Second day pullback. Numbers aren't pretty, but still normal in the context of where we went last Wednesday, Thursday, and Friday. Uh, let's go right into the numbers. G6 down 1.17%. S&P gap down at the open 0.6%. Closed basically right there after a little bit of chop and mostly basing action today, which is good. Basing, when you break out from the base, the default or the expected is that you will resolve in the direction of the primary trend. And in this case, with the breakout on the FOMC meeting last Wednesday, that trend would be higher. So that's why we're uh, considering this still a normal pullback. Plus, we haven't given back over half of the move, low to high, over this most recent run up. So as long as we're holding half of it, it's normal to give back half. But you don't want to give back much more than that before resuming the uptrend, or charts start to get damaged and it leans more toward bearishness than bullishness. Nasdaq 100 down 0.85% today. Dow, the leader for the second straight day, just down 0.1%. Mid caps down 1.1. Russell 2000 down 1.4. Global diversified 60/40 stock bond down 0.7%. In-house GROTECTION down 0.6%. We'll get to the tail of the tape and charts of interest in a moment. But first, let's get to an explanation of what we do here at Revere Active Management. Our first goal is to protect the downside. In other words, we don't want people who have trusted their life savings to us as they approach retirement to get hit with a big loss approaching retirement, as that can just devastate your portfolio and your retirement plan. So our number one job here at Revere as active managers is to protect the downside. Then when the market gets to a more healthy posture, we participate in that upside, having preserved a bunch of capital. So uh, the way we see things is, there are times when we will underperform, and one of those times is what we just saw. These are different types of markets and how we're expected to perform there, coming off of a correction off a severe bear market where we strongly outperformed, transition into a bear market rally. This is the low off of a correction. We're going to have moderate underperformance there as we're going to from basically all cash to getting finding leading stocks, getting in sync with the indexes as they come off the bottom, and it takes time to get that up. So normally we underperform there, but we're basically have transitioned now to this bull one phase, which is early bull market or the later part of a bear market rally where we're going to be in line or minor outperformance. So really, this is where we are right now, bull one. So Let's get right into it. So here's the S&P 500, and here's what I mean by getting back involved. We get above the 200-day moving average, starting down here, putting in a bottom, little bit of a base. First, we get above our short-term moving average. That's the green line, the 21. Then the red line, the 50-day moving average, and then we just continue to. The market has just been trudging higher along this ADMA, and we just get little by little more involved. If you've been following us over the last couple of weeks, you've seen us get more involved both in individual stocks and in the overall indexes. Doesn't always work out perfectly. We understand that. That's why we're quick to cut anything that's not working very quickly and focus on what is working. So here's the S&P 500. Let's go to a 60-minute chart here. Here's the move from the Fed last Wednesday, followed it up Thursday, Friday, a little bit of a pullback, continued pullback today, but look how tight today was. And this is about as far as we want to go, really 4,100. We can give it to 40, 50 would retrace the entire move of the Fed and imply that maybe that jobs report that came out is causing more of a problem looking down the road and as far as how much money managers want to put to work in the market. So we're very closely monitoring where we are now, very oversold on 60-minute stochastic, but on a daily, we're trying to come off of overbought again. We're mindful of all this. Last two times we tried to roll over, the bulls showed up and sent it back higher, and that's what we're looking for. A couple of negative things happened. We'll talk about that when we get to the dollar and interest rates off of that housing report on Friday. So there are some cross currents that we're aware of, but right now, normal pullback. Nasdaq 100 didn't quite touch the ADMA today. The S&P 500 did, and it's above this 300 level, which is where the ADMA is. So again, strong up 2 days back on the pullback, still haven't given back half of the move. Dow, which had been lagging over most of the last month, you can see the relative strength line there now outperforming the last 2 days higher. Mid caps MDY 2-day pullback after the move up, uh, being contained by the 8 EMA and small caps IWM. Again, the pullback contained by the 8 EMA. Nothing wrong at that look right there. Let's go to the dollar. This is one of the things that's concerning. 60-minute chart on the dollar here. You can see the gap up on Friday after the strong jobs report. This basically canceled this breakdown below this 27.6 level. And now today you had another gap up on the dollar. Let's go to the daily chart here. You can see changing character relative to the moving averages. You've got the 21-day, which contained this big move down. We're now above it and it's flattening out and turning up. And we're right into the declining 50-day moving average. So definitely something that we're monitoring as the strong dollar has been a tailwind a headwind for stocks, but this weak dollar was a tailwind for stocks the prior period while it was headed down. So very clearly something we need to keep an eye on. Let's go to the VIX. VIX up today, but where did it stop? It ran into the declining 21-day moving average. This is again something, this trend that we're keeping a close eye on, trending below the downtrending 50 and 21-day moving average and below this 20 level, which had served as support going all the way back to March of last year, which we finally broke through now. Broke through it, going back up, it should act as resistance, and that's what the bulls want to see. We don't want to see this go much above 20 or above this declining 21-day moving average or 50-day moving average. So that's the VIX and the dollar. How about equal weight indexes? How did they do today? RSP down 0.7%, just slightly worse than the Dow, and QQEW equal weight NASDAQ 100 down 0.82%, basically in line with the market cap weighted NASDAQ 100 sitting on the ADMA there. Very normal pullback relative to what we're seeing after the move up. Let's switch to bonds now. We'll start off with junk bonds. Junk bonds pull back now twice. This is consistent with the higher interest rates that we've been seeing since that housing report. Let's go to the broad bond index, BND, second day of a pullback, sitting on the 50-day moving average. LQD is corporate bonds. Second day of a pullback below the 21 now. That would be a change in character if this continues. And TLT, the 30-year, second day of a pullback, sitting on the uptrending 50-day moving average. If bond prices were down, then we're expecting yields to be higher. Here's the 10-year yield, big up move, up 2.89% above the 21, above the 50-day moving average. This is negative for stocks. And again, something we're keeping an eye on, 0TYX, the 30-year. Also moved up 1.2% today, sitting on the declining 50-day above the declining 21-day. Finally, let's go to gold and gold stocks. The dollar was down big, but not much damage to gold and gold stocks today. Or you can see GLD actually positive by 0.2% after the big move down on Friday, and GDX down 0.36, sitting. This 30 area is really big for GDX. Which is why we haven't sold or gotten stopped out of our remaining position in GDX here. We took half of it down on the gap down on Friday, still holding on to half of it. We're negative on the position, but not negative enough to sell it. This could be a bear flag forming, though, with the action today. On the other hand, it could be trying to put in a bottom above this 30 level and turn up. You can see we're very, very oversold on the 60-minute on GDX. So looking for a bounce there, and we may sell that bounce. SLV, this got weak. This was the leader versus gold, got weak when gold broke out and has just been really lagging on a relative basis. And you can see the breakdown below the 50-day moving average and down again today. And finally, Bitcoin BITO. Down 1.57% today, still in this tight range, as you can see on the 60-minute chart, between 14 and 15 there. So those are the major indexes that we track. Let's go to the tail of the tape. Uptrend. Let's see what stands out here. This is a downgrade on the stochastics for 4 of the 5 indexes and the G6 indexes. Also a downgrade for what the dollar and rates are doing. So we are cognizant of that. That's why we haven't really increased exposure much during this 2-day pullback. Now we're expecting the pullback to hold, but if it doesn't, we're prepared to react to become more defensive. Fear and greed at 71. That's right on the extreme and greed and extreme uh, borderline, operating under the bull case since the 1-6 follow through day and the positive action from the FOMC. Bear case would be obviously a break of support and the 21-day moving average. Some news, of course, the U.S. shooting down the Chinese spy balloon finally on over the weekend, and then tomorrow. Is it tomorrow? It's Tuesday. It's Tuesday, not Wednesday. Tomorrow, Jay Powell speaks at 12:40. Always interesting there. Some more news. I didn't mention this last week, but we had a golden cross on the S&P 500. The 50-day crossed above the 200-day moving average after being below it for about 11 months. So good stuff there. Day count from up 3 to 1 consolidation to up 2 with 1 consolidation. ADMA was touched today on the S&P and bounced. So our 12th day at or above the ADMA, also 12th day above the 21 EMA on the S&P. Expectation positive as long as we're above that 40-50 FOMC level. Today, pullback day 2, normal action. Let's look at this. Let's look at this 5-minute chart. You can see how tight we were on the S&P today after the intraday. So there's the opening, very tight. We lost support there all the way down to 40.93, but then a strong bounce up to 41.24, and then we spent the rest of the day basically from 11 o'clock all the way to 3 o'clock in this tight 0.5% range. That's basically a spring coiling for a big move one way or the other. As I said very clearly, the bulls want to see a break above today's highs and the Friday afternoon highs to get back in the upper part of this range that we've been in. On the plus side today, staples and utilities finished positive, in addition to the dollar and yields being higher on the downside. Bond prices. With the strong dollar, you typically see emerging markets weak. You did see that. K-Web also, semiconductors and software taking a break. ITB builders down as rates up for the second straight day, semiconductors taking a break, XLC, XLK, and XLRE. Not so much XLRE, that came back a bit late in the day. So really just XLC and XLK were the worst performers in the S&P 500. Retail pulling back, and pick, which led for a while, starting to roll over. Focus, we'll take a look at what we hold as well as an additional five other stocks in-house. We added to our DT position today. That's acting great after a gap up. We bought QLD on the initial pullback and bounce today. And we trimmed half bros as our last two buys above 40 just didn't hold 40. And we don't want to be holding losing positions as the market consolidates. There's a fine line between patience and giving something too much room, and we'd rather err on the side of caution. It's very easy to add exposure. We've got multiple stocks to pick from, and a lot of early leaders pulling back to more valuable or and lower risk buy points. So bottom line, pullback for the second day, still holding half of the FOMC move. That 41.01 undercut and reclaim today. That's a good sign there. Uh, but we'll see what happens tomorrow, closing at 41.11. Prior close at 41.36 on the overhead is 41.99. Let's get to the focus list now, and we'll start off with what we're holding in-house first. The three ETFs, XBI, biotech, led early, gave up a little bit today, but this is still acting fine, closed right on the ADMA. Any closes under the 8 during this pullback are when so many things are holding it. If something that you own is not holding the 8, or even worse, the 21, it's very clearly a laggard, and you've got to give consideration to what you're going to do with it, such as GDX. When we talked, it's very clearly below the 21. But sitting here on the 50-day moving average in this massive 30 level for support, we're still holding half of a position. OIH, strong early, weak then most of the day, came back late in the day, finished positive. Oils have been underperforming. We're wary of that. We're down to a 2% size on this. Now, individual names, Boeing, we sold half of this last week. Boeing looks like it may have, with the defensive names working better today, and for the second straight day, really undercut Friday's low and then rally. And it did hold the low of the earnings day at 203 there. So finally, some positive out of Boeing. We don't want to see today. Basically, today's low is our stop on this, and it needs to move up off of this 21-day exponential moving average. Shopify consolidating nicely after this move out. Normal 2-day pullback for that. Tesla continues to be a leader, coming into the 200 range there. Bros, I mentioned how we sold half of that. Here are our two buys above 40. Thursday, 1%, Friday, 1%. We sold them today, sitting on the ADMA, but just no follow-up strength whatsoever. I understand volume was light, saw the rollover on the stochastic. Uh, some things not acting so well during the day. So Bros still have a 2% position in that. AEHR, still acting great, consolidating near the high of its range. DT, I said we added to this today. We now have a 3% size on this. Hopefully this goes sideways, waits for the 8 EMA to catch up with it. Perfect volume patterns. The pullback day lower than the 3 up days on DT. TMDX had a little bit of a rough day today, pulling back 4.73%. But this is kind of a volatile stock, and it's the first day pullback after 4 up days on TMDX. ON reported earnings this morning. Pretty volatile day. Started off with a sell-off, moved up higher, and then just dripped lower all day. AI, probably the strongest stock in the market, was up 20% at one point today before starting to give it up. Just extremely extended any way you look at it. Apple, normal pullback after a big day on Friday after its earnings report, where money very clearly flowed into it on Friday. Tight range, holding above the 200-day moving average. CROX, CROX, starting to weaken. First close below the 21. Has been very tight now for 4 weeks. You can be too tight for too long. Maybe waiting for earnings coming up in 2 weeks. We rolled over on the stochastic. Sometimes you just can't get any more out of these names. They did go from 100 all the way up to 130, so a 30% move in 4 weeks. Sometimes you just got to ring the register and move on. And finally, GEHC, positive reaction to earnings last week, bounced off the ADMA again today. This is looking really good. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. As always, like to hear from you. And remember, it's not how much you make in the market, it's how much you can keep. And with that, we'll wrap up Monday, February 6th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.